Hi everyone, hope you're all doing well, and today I'm going to talk about the two stocks that I bought last week. One of these stocks is one that I've been buying quite often recently, but probably will be one of the last times that I buy it. And the other stock is a stock that I've not bought for a year, but I thought, you know what, now's probably a good time to buy a few more shares in it while it's on this bit of a dip. So I hope you enjoy the video and we'll take a look. Just before we start, just to let you know, if you do want to join the Patreon, that is where I post where I'm buying and selling in real time, not a week later on YouTube. So if you want more instant updates, that is the place to be. Just to let you know that I believe the Patreon is the highest patron to subscriber ratio on YouTube. So yeah, to have so many subscribers go to the Patreon is absolutely amazing. It helps support the channel a huge amount. And just to let you know as well is that there is this exclusive video up this week, which is a live Q&A session, which was on Tuesday, which is about half an hour long. And there should be 2 more exclusive videos this week on Patreon over the weekend if you are on there. Anyway, but we'll get started into the video. So if we look into the video right now, Nasdaq is down once again. It's carried on its fall off this week. We're down nearly 15% now, so we're only 5% off a official crash or bear market in the Nasdaq. S&P 500, same again this week, has had once again a bit more of a wobble. Not as much, but still we're down nearly 9%, so we're just short of a actual official correction on the S&P 500. But it does mean that so far, and there's only a few days left, but we are heading towards the worst January on record for the stock market. So obviously that's something to be proud of, you know, when obviously at some point when a lot of these stocks come back into favour, which obviously when you're in this situation and stocks keep going down, you're like, oh, they're never going to come back into favour. And it's the same when the stocks are going up. You know, back in a year ago, you're like, oh, are these stocks ever going to have a pullback? And now we're back in that other cycle where we're going down. You're like, is there going to be a day when these stocks come back? But when they do, and we see the stock starting to reverse, you'll be able to say I was officially in the stock market for the worst January ever. So yeah, that's something to be proud of if you do make it through the other side, I guess. And just a little bit more off topic for a second is that Apple is currently up in pre-market. I thought this would lead to pre-market being up, but it's just actually fallen back a little bit. So I thought with Apple's earnings that we would see a pretty decent lift in the stock market on Friday. At the moment, it's not showing it. But yeah, something to just point out there. Microsoft earnings, theirs were pretty good. Gave the stock market a bit of lift on the Tuesday, but since then it's kind of giving it all back. And a shout out to Tesla. They reported their earnings, which were pretty decent. And yeah, their stock absolutely got hit. It's down 11% and we're back down at $829. Obviously, I've owned Tesla twice before. My last time selling it out just above $1,000. So yeah, I mean, I won't mind owning Tesla back at the right prices. I think it would have to drop a little bit further for me to buy back in. But interesting to see this one dropping off after some pretty decent earnings as well. But getting on to the stocks today that I bought, or the 2 stocks that I bought last week. Shopify. Shopify is number 1. So I bought this one around February time last year. So it's been about a year since I've held this stock, and it's done very well until what you would guess, the last kind of couple of months, as the whole stock market's been hit. This one in November, the majority of growth stocks just instant snapback, and yeah, a lot of these growth stocks have basically entered a stock market crash situation. This one has lost 51% in 3 months. Shopify, 51% in 3 months. That is a massive, massive sell-off. And, you know, a lot of people will look at this and go, yeah, it has been on a good run though, and the valuations were stretched, which I do agree with. The valuations were quite high on it, but you've got to realise that, you know, Shopify for the long term, when you look in the next kind of 1, 2, 3, 4, 5, even if you want to go 10 years down the line, Shopify is so set up for such a good future. And you're looking at this going, at some point someone's going to start buying up these sort of stocks. You know, the drop off in share price is absolutely huge for a company like this, and I think it's crazy prices. So you know, this is currently a 102 billion market cap, but easily in the next 5 years I can see this being a 200 billion market cap, maybe even more than that. And like I said, I haven't bought this stock from February time. I just thought, you know, I'll just buy this stock in February time, and yeah, it's done really well. It went on a good run. I did take some profit out, which I think is always really important to do. But since we've had this massive drop off, that little profit that I took off the table, I thought, you know what, let's put this back into Shopify now, back at cheaper prices. And the crazy thing is that I'm actually averaging down on Shopify now. So even after holding stock for a year, I'm having to average down on this one, which is how much this has sold off. And the crazy thing is, well, one more crazy thing is that this actually put 52 closing around 780, which is the lowest it's been, which is crazy. So yeah, I am buying up this opportunity in Shopify. historically, very good revenue growth. The company's grown huge. I mean, you look at the share price. If we look back at the share price here, the share price is now back at prices it was around about May 2020. So yeah, it's nearly coming up to 2 years of gains totally wiped out on the share price. And if we just look at the financial performance here, if we go from May 2020, the company was doing 1.2 billion. It was still making a loss, and obviously there's a bit of a jump in the profit side of it here, which probably won't be sustainable, but you can see here it's now gone to 4.5 billion and it's now profitable. So you can see here, 1.5 billion, and now we're going to 4.5 billion. The revenue on this company is tripled. It's now profitable, and if you look at that, the share price is now back at May 2020, and you've got a company that's just made so much improvement here. So I thought, I'll buy the dip on this one. Financial health wise, it's very healthy on the balance sheet. Ownership wise, there has been a bit of insider selling, which you would expect for a company that has been on a good run. Most of this though did come not in the last 3 months, but previous to that. But obviously the company's still great because it's got Tobias still leading it, who's the founder, and he also has a lot of skin in the game. He's still the largest shareholder in the company, which is great. Going on to next year, they are expecting to grow 32% revenue growth. We'll see what happens. I could see Shopify actually probably growing a lot faster than that, but we'll see. If they still do 32%, that's still pretty decent amounts of growth. And this is one of those companies that it was only a matter of time before it would come profitable, because the amount of revenue they're increasing is huge. If you look here at revenue subscriptions, 245 up to 336, and then on merchant solutions 522 to 787 on their recent quarter, and the gross profit, if you look here, 608. So their gross margins are nearly 50%. So when you're making all them sort of margins, all these guys do is they do reinvest into the company a lot. You look at the sales and marketing, research and development, general and administrations, transaction and loan losses. So you look at this here, the gross margins are absolutely huge. And if it wasn't for them to just reinvest in the company, you'd have a very profitable company. And it was only going to be a matter of time before they started putting a lot more amounts of profit in, which they are starting to do now. And if you didn't know what Shopify does, it basically lets a lot of businesses go online and create a website, which is an absolutely amazing platform. But as well as enabling them to create their actual platform. So if you look here, let's say there's this company called Snow Devil here. They're able to create their own website, which is great. But then what they do is they handle the payment side of it. Now one of the new additions is they have capital, so they're actually becoming a bit of a lender. So if businesses need a loan, they will lend loans out. Marketing, they do a lot of the marketing through the platform of Shopify. Analytics, apps to add on, inventory and fulfillment, so they are now able to take a lot of your products in and send them out for you. Order management, so you know where you're at, and shipping side of it. So this is like the complete model, what you need to run a business, which is absolutely amazing. So, they're covering so many interests here. It's not just a business where it allows you to go online and create your website. They just do so many things for you, where it's to the point where it's like, oh, should I just get a normal website, or could I get this Shopify site that probably saves me paying so many different more businesses, and maybe even people that you employ, because you've got Shopify doing a lot of this side of it, that it probably save you money to do it. So the amount of things they're covering now is great, and I can only see more and more platforms or businesses going to use the Shopify platform, and more of those incomes in the business being used more and more. So I think Shopify has a very bright future in the next 5 years, and I can only see this doubling in the share price in the next 5 years. And the next stock is Hims and Hers. So I did buy a little bit more Hims and Hers, probably one of the last times I do buy this stock now. I am pretty much near a fully built position. Potentially I could buy one more time, but I'm pretty happy with it. It's just a mid-sized company in my portfolio for me, and that's where roughly it is right now. It's definitely not one that I would like to make a biggest position, just because it does have a little bit more of a risk with it, but I do think it's a fantastic company. It is down at $4, and this is one of those that I'm going to say quite often to people, is that for me, I'm down like 37% on this one, and it's one of those that you do kick yourself because you're like, oh, I wish I was only like down 10% and I had a better average. But it's one of those that it's one you did not know this stock was going to go. Sure, I mean at $23 it was definitely overvalued, but if you started buying around like $10, $8, which I did, I started buying around about $8, you know, there's no way that you would have known it would have gone down to $4. There's nothing you knew that you were going to have a growth stock crash. You know, you normally only get these massive fall-offs in stock market crashes. So you shouldn't worry too much, because when a lot of these growth stocks do come back in favour, you know, Hims and Hers has the potential just to shoot up, you know, very quickly 30%. And you're like, oh, that's not too bad now. So, you know, this is the thing, is that, you know, this is something that I've seen quite often, is people are kind of kicking themselves going, oh, I wish I could buy it down at $4, but you generally didn't know this was going to happen so much like this. And you got to remember, a lot of these stocks are like at historic low values, you know, like Hims and Hers is now valued at the lowest it's ever been at, even though the company's making so much progress. So yeah, even though it stings a little bit and you're like, oh, you know, if only I knew that, you didn't know that. So don't kick yourself too much. And because these are so cheap prices, when they do come back into favour, I think, you know, you don't have to, you probably won't have to wait too long until you see Hims and Hers quickly go back to $5, $6, $7, and then, you know, you're not looking too bad at all. So as long as you can bring your averages down a little bit at the moment, you know, don't worry about that too much, I would say. But overall, like I say, you know, you look at this company, it's so much share price appreciation at the moment, and the company's absolutely on fire. You know, if I was to tell you, like, from not a share price point of view, but when you actually look at the businesses, if I was to tell you, like, well, if you ask me, name me the 3 best performing businesses that you own in 2021, Hims and Hers would be my top 3. It could arguably be my number one. But I think Gang and maybe DraftKings might pop up and say a few things, and a few other ones, but it would probably enter my top 3, because the business has been on absolute fire through 2021, and you look at the share price and it just doesn't reflect it at all. It just seems to be caught up with a lot of this growth stock sell-off, SPACs in particular, because it was an ex-SPAC. And if I just flick down, like, the positive news that's just come out on this, you know, Hims and Hers and Walmart collaborate to expand availability. You know, a new store coming in that will add into the revenue this year. If we go further down 2021, partnering with Uber, Hims and Hers to offer its health and wellness products in Amazon US store, Hims and Hers mobile platform for over 500,000 subscribers. We've got Hims and Hers and Walgreens collaborate. Here, we've got some more down here. The vitamin Shopee. We've got another one down here. Partners with Revolve. So there's just so many more partnerships that this is the thing, like, these ones here that I'm going through haven't even come into the financials yet. So there's so many more partnerships that are coming through at the moment. And this year, well, the year just gone, 2021, this company was supposed to grow 30% revenue growth. Currently grow at 77%, you know, like over double what it was expected to do. Over double. That is not, you know, you're not talking, oh, you know, beat expectations. It was supposed to grow 30% and it grew 35%. You know, that's a really good beat. This is just totally out of what was expected. You know, this is crazy, beating expectations. And next year, it's currently analysts are expecting 32% growth. I don't think they will. I think you'll be talking at least 40%, and realistically, you could be up to 50% in revenue growth for this company, because the partnerships are growing. They always, you know, aim low and then absolutely smash it. So, you know, this is one here that I would be looking at and thinking these analysts are going to be in for an absolute shock going forward. And going forward, you know, the revenue growth is absolutely amazing. It is a little bit in and out of profitability. Well, it's taken quite a few losses at the moment, but that's because it is focused on growing the business. But when we look at the gross margins in a second, they're fantastic. Financial health wise, it's amazing. It's got a lot of cash on the balance sheet, no debt on there. You know, you're sitting on 250 million. So for a company at this size, that's a lot of cash. Ownership again, you've got a founder-led company, a lot of skin in the game, which is absolutely amazing. And if we just look in the financials here, 74% gross margins. So the gross profit is 54 million. And if it wasn't for them reinvesting so heavily into the company, a very profitable business. So, you know, this is something like we showed earlier of a Shopify, which they reinvested into the company more and more. And eventually, as the revenue keeps coming in, they will scale up to profitability, and you'll see that what that has done benefits for Shopify previously. And Hims and Hers is in a very similar position. It's growing revenue huge, and it's just reinvesting into the company. You know, those gross margins are very easy for this to turn profitable if it wanted to, but it's taking market share and more revenue. And when it matures a bit more in a few years' time, that revenue will lead it to go profitability with them gross margins. So yeah, no, even though it is losing money, no worry for me, because it clearly has a path to profitability here when it wants to do it, rather than expanding and reinvesting into the company. So yeah, hope you enjoyed the video anyway, guys, talking about these 2 stocks that I bought, and a bit of a recap at the start anyway, guys, and I'll catch you all in a bit.